What's your interest rate? Will you be subject to loan level pricing adjustments? Within the last couple of years on conventional mortgage loan products, both Fannie Mae and Freddie Mac have instituted what are called loan level pricing adjustments. Loan level pricing adjustments will increase your interest rate based upon your credit score. These pricing adjustments are presently triggered as a borrower's credit score drops below 740. These adjustments will increase as the credit score declines below that 740 mark in 20-point increments. Thus, if you're inquiring about interest rates for a conventional mortgage loan program, it is imperative that your lender know your credit score and give you an accurate rate quote. This, of course, is in addition to all the other factors that can affect your interest rate. If you speak to a lender asking them, "What's your interest rate?" and that lender does not inquire about your credit score or request permission to pull your credit report prior to giving you a rate quote, then I suggest you talk to another lender. You may want to view my video, "May We Pull Your Credit Report?" Let me give you some examples of the impact of loan level pricing adjustments. These examples pertain to a basic 30-year fixed rate loan for the purchase of a primary residence with 20% down and a conforming loan balance. This example starts with a rate for someone with a credit score above 740. At the same rate, if your credit score is as follows, you will see the following increased discount points associated with that same rate. Credit scores between 720 and 739 will have an additional 1/4% in discount points. Credit scores between 700 and 719, there's an additional 3/4 of a discount point. Credit score between 680 and 699 will see their discount points increase 1.5%. Credit scores between 660 and 679 have an additional 2.5 discount points associated with that loan. And lastly, credit scores between 620 and 659 will see their discount points increase by 3 points. Looking at this another way, which is your interest rate is moved up to absorb the increased discount points, you would see the following rate changes. Between 720 and 739, expect to see your interest rate be 1/8% higher. Credit scores between 700 and 719, the rate will be typically 3/8% higher. Credit scores between 680 and 699 will see their rates increase by 0.5%. Credit scores between 660 and 679 will see their interest rates go up 0.75%. And lastly, credit score between 620 and 659 will pay an interest rate 1% higher than someone with an above 740 credit score. You can see that a small change in your credit score will make a difference in the rate you are quoted for a conventional loan program. Now, the differences are smaller if you were to make a larger than a 20% down payment, but also the differences are greater if your down payment is less than 20%. Consult a trusted lender that will review your total circumstances. For a brief period of time in 2008, FHA implemented a loan level pricing adjustment through increases in its upfront and monthly mortgage insurance premium. Now, Congress requested a moratorium on this, and these adjustments were pulled back. So while at the present time FHA does not have loan level pricing adjustments, don't be surprised if HUD does not try to apply these later. Loan level pricing adjustments are one of the many factors that will affect your interest rate. Hey, why don't you subscribe to my channel to view other videos discussing factors that will affect your home loan interest rate? What's your interest rate? Will you be subject to loan level pricing adjustments? This has been a presentation of My Home Loan with Jay. you.